Our mission at Resilient Advisor is to have a significant impact on the retirement crisis by educating and empowering financial advisors to better serve their clients. In the new Resilient Advisor series, How I Serve, we interview top financial advisors who are making a difference in the lives of their clients.
Going independent is incredibly rewarding, but most advisors don't end up in the best place for their business. They instead end up getting sold by smooth-talking recruiters, custodian reps, or worst of all, aggregators who don't have their best interest in mind. The Independence Incubator from Resilient Advisor takes a fiduciary approach to independence. Our clients pay us directly for unbiased guidance on the best path for their business. Don't get sold, get educated, and get unbiased guidance. Visit independenceincubator.com to learn more. The How I Serve series on the Resilient Advisor has turned into one of my favorite series. We get the opportunity to talk to top financial advisors and learn how they built their business and how they serve their clients. My guest for this episode is Dasarte Yarnway, the CEO and founder of Berknell Financial. Dasarte, thanks for coming on.
Thank you so much for having me on the show, Jay. I really appreciate it.
All right, we're going to have fun with this one. If you are watching live and you want to ask a question, if you are on Facebook, LinkedIn, YouTube, or Twitter, simply just type a comment and I will pose it to my guest. Let's start from the beginning. What'd you do before you got into financial services?
Well, I've always been in financial services, which is the crazy part, right? So before working at my first job, which was an independent firm in San Francisco, California, I was a college football player, student athlete at the University of California, Berkeley. I played football pretty much all my life. That is American football. I know that for people that may be watching in Africa that follow me on Twitter, football is soccer, right? But I played American football since I was a youth. I was an All-American in high school, went to the University of California, Berkeley, and found myself in a peculiar situation because I injured myself. I had 2 knee surgeries. I had a foot surgery. And I thought to myself that no matter what the future held for me with this sport, I would have made sure to use all of the lessons that I learned on the playing field, all the lessons that was instilled in me as a child to make the most of this situation, right? So I remember I want to say spring of my junior year, I interned at like 3 different places at the same time. One was at a doctor's office. One was doing financial advice, kind of accounting, really. And the other was at a tech firm out in San Francisco. Had an affinity for planning, but never really thought anything of it. And upon leaving school and deciding not to come back for my 5th year, which was actually the year that Jared Goff came into Cal Berkeley, I got a job with him. That was 2000, and I graduated in 13, so he came 2014, which was the following year. I got into this firm, and my life changed because at that firm, I saw that I missed out on like imperative conversations that I should have had, or, that would have changed the trajectory of how I viewed money, right? So it was like a cheat code. Like these families had this cheat code that was passed down from generation to generation to generation. And I couldn't understand. So I decided to learn as much as I possibly could to give this information to the people whom I thought needed it the most. And that kind of started me down this rabbit hole of being a financial planner.
All right. So did you start at a regional, an RIA? What type of firm was it?
Oh, no, I worked at a big firm. It was at the time one of the largest independent firms in the world, really. So they had offices in Camas, Washington, in San Mateo, California. They were opening an office in London at the time. I actually contemplated moving to London to work in that office. So it was a really, really, really big independent RIA firm. Still is today. After that, I went to a brokerage. I worked at Edward Jones. I knocked on doors. I did that whole thing.
Lots of people have.
Lots of people have, right? Started there, got licensed there. Go ahead.
Before you move on from Edward Jones, some of the top financial advisors I know started there. And I think there's something that people learn when they're at Edward Jones that really helps them on the other side. What did you take away from your Edward Jones experience?
That's a good question because I had 3 kind of experiences before starting my firm. The first was at an independent firm, the second at Edward Jones, and then I went to the bank, right? So let's just start with the first. At the independent firm, I learned about the power of independence. What that means is you have the autonomy to do things your way. You can create your own investment philosophy. You get to do your own marketing. You get to speak to a specific client demographic if you're trying to niche in a particular demographic. The power of independence is one of the best things that an advisor can have if they're trying to build a business their way. Now, going to Edward Jones was interesting because they really taught me how to humanize financial advice. It's just you. It's something that they call somebody that they call a branch office administrator, and you guys are together trying to build a business. So you're across the table and you have to be human with these people who are coming in from your local community, right? And pouring out their hearts to you as it pertains to their financial concerns, their family history, their fears, their successes, and everything in between. So at Edward Jones, I feel like it taught me resilience. It gave me thick skin. I knocked on doors in the snow in Chevy Chase, Maryland. I did it all. But at the end of the day, I think the biggest lesson was to go to your client and humanize the advice.
Mm-hmm. That definitely thick skin when you go through the Edward Jones program. Now, why Chevy Chase, Maryland, when you're a West Coast kid, it sounds like?
I was 20, what was that, 23 at the time. So one, I was down for the adventure. Two, I thought that the DC area was just thriving with young professionals, right? That I felt like I could speak to directly. And they had a good balance of, suburbs on the outside, Chevy Chase, Friendship Heights, Bowie, Maryland, if you go further out, Montgomery County. And I thought this place was rich with underrepresented professionals. And I thought that was a demographic that I really wanted to bring this memo or these cheat codes to. So I thought DC was the perfect opportunity, one, for me to perfect my craft, but two, have a good blend of potential clients that I could work with, from young professionals all the way to growing families in the surrounding area.
Okay. So then from Edward Jones to the bank, how long were you?
Yeah, I was at the bank for maybe about a year or so. And from the bank, I learned very important lessons just about the business of finance, right? There's business involved. So while I came into the industry, I can't speak for everybody, but I came into the industry with a heart for servant leadership, which meant that I was going to, one, be a servant to my clients, but two, be a leader and like a active person that was doing the things that I was recommending to my clients, right? So if I'm telling you to do this, I was going to be the living proof that I'm doing it too. And that's what I consider servant leadership. But there's a business aspect of doing that as well, right? You have to make money to keep the lights on. You have to make sure that your family's taken care of. And at the bank, I saw how they looked at their practices as businesses, right? So a combination of all of these three things, I try to take the best of all three to create a super firm, which is, I think, what I'm trying to create here at Berknell Financial Group.
Excellent. Before we get into that, our longtime guest, Tyrone Ross, shouting out to you here for being on the show.
Tyrone, what's up,
Tyrone? Man? All right. So the path to independence, like you had a rich history beforehand, lots of good experience. Tell us about your decision to go independent and then what that experience was like.
So now that I'm able to reflect, and I say I'm able to reflect now on independence, is because when you're in the grind, when you're going at it day to day, right? It is so hard to think beyond your next client. It's so hard to think beyond the next idea that you're trying to curate to reach your next client, whether that's a book, a podcast, a side hustle that you have to do in the interim while you're building your hustle. That was me for the first at least 2.5 years that I was building my firm, right? I couldn't really think about why I decided to go independent or what I was just thinking about getting to the next day, right? Compounding these efforts to build the best firm that I could build. So when that was done, and at this point, I built my firm for 3 reasons. The first reason was because I believe that financial advice was not given to people that needed it, right? And I think that a lot of firms are built on this notion of solving a problem. And the problem that I wanted to solve was why couldn't I work with my mom because she didn't have an account that was $2 million? Like I needed to know the answer to that question. Where could she go, right? Why is it that underrepresented communities aren't getting the information that could change their financial trajectory? Probably not in one lifetime, but maybe 2, maybe 3, right? As they continue to accumulate wealth and transfer it. Why was that the case? So the first reason for me was I wanted to serve. The second reason was necessity. I didn't think that there was a firm that existed for me to do just that, like serve in a very authentic way and to speak and work with the clients that I wanted to work with. So it was out of necessity. I had to just create a seat, because there were no seats at other firms for me to do this thing. And I tried it, as I mentioned before. I worked at an independent RIA, I worked at a brokerage, and then I went to the bank. I felt like if I was to go to another firm, it would have been more of the same, right? And I didn't want more of the same. And number three, which is probably the most heartbreaking yet the most motivating reason for me, is that my brother in 2015 passed away. He actually came to America, was a refugee of the Civil War in Liberia, where I'm from. Liberia Independence Day is Monday, so shout out to any Liberians that are watching the podcast. Um, but he came, he was undiagnosed with a condition. He passed away. He was 26 years old. At the time, I was 24. And when you think about time, and I talk to my clients about this a lot, I talk to them as it pertains to building their wealth and how important time is. We only have one shot at this thing. So literally anything that you want to do, plan for it and do it, because you have one life to live. And I thought about it like I didn't want to have any regrets. I didn't want to think 20 years from now, why didn't I start that firm? Why didn't I at least take a chance to do something that was on my heart, right? So it was really just those three things again. I wanted to serve. It was out of necessity, and I wanted to just make the most of my time and seeing how finite our time really is.
Well, that's a heck of a North Star, and purpose and passion help you get through the tough, lean years when you start a business, as every entrepreneur knows. What about the actual specifics of your firm as you were building it? So you had this great mission, but you needed a platform to execute on it. What did that look like in the beginning?
Yeah. So that's a great question. And I think that for me, I tried, failed, tried again. And I think it's important for advisors that are watching or that are listening, right, to know that you're going to go through this process of exploration when you're building your firm, especially if you're an emerging advisor with not bringing any assets, right? You're going to have to figure out what works for you. And that's exactly what I did. So when I first came out, I took the model of the bank and I tried to implement that into my practice. It did not work, right? So I was charging people with not that much money, right? A standard 1% fee didn't make any sense. What is $10,000 going to do on a 1%? It didn't make economic sense. So I found myself doing a lot of like side work on the side, right? Like little hustles on the side to make sure that this worked. I do not regret that at all. So that didn't work. And then I had to figure out a way, pricing. I had to figure out how to price the services, what made sense, right? And that's something that over the years has continued to evolve. But number two, which I feel like is the most important thing, is how am I going to reach these people that I feel need to hear this message or that I feel that I can serve? So I love to write. I wish I had more time to do more of it. But back in 2015, 2016, I had a blog. And on this blog, I would just answer the questions that I knew a lot of DC young professionals had at the time. So that was experiment number one. I had maybe a collection of 50 to 100, let's say, blogs that I had written over, say, a 1-year time span. So I'm cranking out content every day. That was number one. Number two, I arranged like these happy hours for DC professionals to go. I think I heard a wild stat one year that DC was the second city that consumes the most alcohol to Las Vegas or something like that. So I'm like, hey, if that's what you want to do, let's have a young professionals happy hour and we can all gather here. So I ran maybe one a quarter for a year. So all these young professionals that were working at places like Deloitte, working in the US government, right? All of these different kind of sectors in DC would come to these happy hours, and at minimum, I would make a new friend. On the high side, I would make a new client. I took these collection of blogs that turned into my first book, Dating Benji, right? I began to get more, I guess, notoriety from that book, and then the rest was kind of history after that.
All right, so I want to go into that first book for a minute because a lot of advisors struggle with this concept of writing their first book, and it's just such a powerful tool to get your message out there. But that when you first went independent, what platform were you using? Were you on Schwab, TD?
That's a good question. When I first went independent, and this is something that I hope that we can fix as a industry. When I first went independent, I actually used a small custodian called Shareholder Services Group at the time. They were like, look, we don't have any minimums. All you have to do is give us a check of this amount to, put in your master account. We'll do the background check. We'll do all that stuff. And if it all checks out, you can hold your clients on this firm. I did go to Schwab. I did go to TD. I did go to all these firms, Fidelity, but as you know, the minimums to be on those platforms are north of $10 million on the low side.
Mhm.
And while my book of business from Edward Jones and at the bank, I had over $10 million. You know how it goes with non-compete clauses and all these different disclosures that you have to sign. So my mentality was I was not going to bring any clients over from these places to start my business. Now, some advisors do, and they'll have a different situation, but I started with Shareholder Service Group, who clears through Pershing.
Okay. And later we're going to talk a little bit about Altruist and how they're helping solve that problem. But
Hmm.
let's go back to your book.
Okay.
So you said you enjoy writing. A lot of advisors do enjoy writing. They get to the independent side and they realize they have this freedom to get out there and share the message. What was the process you went through to write the book?
Yeah. So as I mentioned before, I was writing blogs, right? I was writing blogs, and I had a bunch of content from the blogs that I could kind of draw on, and I repurposed it pretty much into a book.
Okay.
At the time, though, I was in DC again, meeting a lot of young professionals, actively listening to their concerns and their pain points. And the book, Dating Benji, Straight Talk on Improving Your Relationship with Money, was pretty much uh, data that I collected from these individuals that I was meeting. So the way Dating Benji worked, it was a relationship with money. Benji is $100 bill. We all have a relationship with money, right? And I created almost different personality types, right, or horoscopes for different people and how they view their money. The saver, the big spender, the risk taker, right? And I
Mhm.
created to-dos or things that these different personalities could do if you resonate with them, right? So that was my introduction into saying, hey, everybody has a different money type, just like they have a different DNA or blood type or whatever the case is. If this is you, this is what you should probably be doing to improve your financial circumstance. But I have to say, it was a lot of collection through the people that I was meeting, right? And some of the questions that they had, just observing. And then I took from those blogs to say, hey, this is what you can do. So for me, being an avid writer, it was an easy process, but I can see how advisors struggle with the idea of creating content.
Yeah, that's the James Altucher model of taking a series
Yeah.
of blog posts, putting them together in a book. Did you self-publish or did you take it to a house?
So I self-published that book. And fortunately, we live in the era where you can pretty much do everything yourself, right?
Oh yeah.
So it's something to be said, and I'm gonna just stop right there. It's something to be said about the man that has nothing. Because the type of energy that I had when I was 23 with nothing is, I can't even, sometimes I think back, like, how did I do that? Right.
Yeah.
But I self-published that book. I did it through Amazon Web Services. As you know, you can self-publish. They'll print the book out for you. They'll Kindle it for you if you put it in that format. Everything was there. I set the price myself. Now, that was the first book. I market this book aggressively. So I was on Twitter, I was on Facebook, I was on Instagram at the time, I was on LinkedIn saying, Dating Benji, Straight Talk on Improving Your Relationship with Money will help you get a better understanding of who you are as a investor, who you are as an individual, right?
Mhm.
That book cleared Amazon top 100 for money management books.
Okay.
So, I mean, if you know anything about books and how how it works, classic books are always going to be in the top 10. Um, Big names, influencers are always going to be in the top 50. So once you get to that top 50, you're seeing names like Susie Orman, Tony Robbins, right? David Ramsey. They're all in that kind of top 50 kind of area. I got to like, at its peak, I got to like 50, 52 or something with Dating Benji. And it was upon that happening that different publishing houses reached out to me to publish a book through their house. And that's how the second book was formed.
Awesome. But before we move to the second book, I just want listeners and viewers to know all my books are self-published through Amazon. They're not even very good books, but they're easy, not easy. Writing a book is not easy, but anybody can publish and
Right.
self-published books. If they're full of value and they can help your clients, they're just as valuable to your business. Very rarely do I pick up a client now that doesn't say, Jay, I was reading XYZ book of yours. So they're
Hmm.
really, really impactful marketing tools that are worth the grind. Even if you don't reach the status, Dasarte, that your book did of getting into the top 50, they're great tools for helping change the lives of your clients. And then when you do have success like you did, then the houses come calling. So what was that like?
Yeah. First, I want to just comment on what you said. They're great marketing tools, right? So I use Dating Benji as my business card as I went out and about in DC. Like, hey, I'm Dasarte. I just started a firm. In my mind, I'm thinking to myself, like, I don't really know what I'm doing, but I know that I'm going to keep doing it. Right? Here's a book, right? That'll help you regardless. If you don't like it, toss it. But if you do find something of value from it, feel free to give me a call. And that's the way I began to begin my business and build relationships in DC that I still have today. Now, your question was about publishing houses, right?
Yeah, the second book and your experience with the house.
Second book and the experience with the house was different, right? Because again, a publishing house is a business. They're looking at marketability of your book, how to title your book, right? Um, who are you going to sell it to, right? How many book sales do you need? So there was a business aspect of it. There's a lot of layers to kind of get it published, but I had a great support team at Coulter to get it published, and I think that it just made the writing clearer, right? It made it precise. It really made it succinct and to the point. And I think for the book that I wrote, Young Money, right? It made that book a lot better for the general public. Had a phenomenal experience, and if you do have an opportunity to write through a publishing house, I think it's worth at least the exploration and the conversation.
Excellent. And remind me, you have a third book in the market now as well, right?
Yeah, Pay Me in Equity. We're actually revising Pay Me in Equity, and we're going to make a second edition. But Pay Me in Equity is all about equity compensation. And I think one of the biggest keys that I learned through the process of being an advisor, owning my own business, investing in other businesses, has been the simple fact that equity is almost the key or the gateway to building multi-generational wealth. And when we think of equity in the word, we think about it in a traditional sense. We think about it as, compounding interest in your individual account, right? Connected to capital markets. We think about it as growth in the value of your home, right? And that's pretty much where equity stops for most people, right? Hey, I got equities, I hold equities, it's growing, or the value of my house is appreciating. In the book, we expand that definition, right? We say, hey, we have a mental model that we use called the 7 pillars of equity, and it talks about things like health. It talks about business ownership. It talks about owning a diversified portfolio. It talks about philanthropy and giving back, right? It talks about all of these different things that to me define what equity is and how that can enhance and improve your experience in life. So Pay Me in Equity, for me, was a catchy title. It actually is derived from a Beyonce song in which she says, "Pay me in equity," right? And I thought that it would be cool. It would be hip for the millennial, particularly in tech, to learn about their RSUs, ISOs, NSOs, and all these different vehicles that are adding to their compensation packages, plus more. So that's one of my favorites.
All right, so let's talk about your firm as it sits today. You've had it's grown. Do you have a specific niche?
Yeah, so we've recently put our flag in the ground, and we said that we're working with individuals and families who get paid in equity, right? So people who get equity compensation. And the second, I guess, sub niche would be business owners. And I did this because I'm a blend of both. I own my business, right? And that is a way of creating equity for yourself, right? And I'm connected, and I come from a place where a lot of the young professionals and professionals in general are being paid and compensated in equity, right? So a huge part of their total compensation packages will be RSUs, which are restricted stock units, will be different stock options that they can exercise for themselves. And I think this makes for not only a great value being an expert in this, right? But it also makes for a very, deep business relationship with the clients that we serve. And that's been great for us.
All right, so this is a stock question for these interviews, and it's about your client journey. So let's go through a thought exercise. Let's say I fit the avatar of that ideal client that you're looking for, and I say, okay, I'm thinking about signing up. Tell me, what am I going to experience? What's the first 90 to 100 days as a client of your firm?
90 to 100 days as a client of my firm. So number one, I think that most of our clients get to us based on viewing, right, or hearing content like this. So it's going to be the Young Money podcast, right, which was a weekly podcast that came out for about 2 years. And now it's transitioned into Pay Me in Equity podcast. So they'll hear something from the podcast, and they'll kind of go on the website and put themselves into our funnel, if you will, right? So that's where the journey begins. So they'll see something, a post, They'll see a blog, they'll listen to a podcast, and they'll come to Berknell Financial Group. I've had people that will come to me 6 months after their first experience with our firm without me noticing, right? They'll say, "Hey, I work at IBM and I've been listening to your podcast for 6 months. I thought that I would set up an appointment." So that's where it begins. Number one, we'll have what I call an introductory call, right? That introductory call happens. And in this conversation, I'm not talking about money at all. I ask my clients 4 or 5 questions. Number one, how did you hear about us? Typically, is some content. Number two, it's what was the catalyst for this conversation, right? Because there's usually a triggering event in which a person feels like they need to get professional help for. So could that be a liquidity event? My company's about to IPO or we just got acquired, right? I've received an inheritance if I'm a young professional. I just want to figure this out, right? I have student loans, whatever your reason is, there was a catalyst for you booking this appointment. So we discussed that. Number three is a question that I used to ask everybody on the Young Money podcast. What does wealth mean to you? Because without knowing that information as a planner, are you truly doing your job? And you want to make sure you're planning to the ideas, the person's idea of wealth. Like, does wealth mean security? Does wealth mean time affluence? Does wealth mean I have the ability to give back? Like, whatever wealth, quote unquote, means to you, I want to make sure that I know. So as we plan, right, we can make sure to factor that into the plan. And then the fourth question is, what are your financial fears? The fifth question is, as an advisor, what can I do to bring value to your financial life? You're going to be spending time, resources, and energy doing a lot of the things that we're asking you to do, right? So I want to make sure that you can go back to somebody and say, like, I really like working with Dasarte and Berknell Financial Group because they do X and Y, right? They do 1 and 2. So those are my 5 questions in that first introductory conversation. Then number two, I give them, everything that they need to make a sound and educated decision. I typically encourage them to interview other financial advisors because I think that you need to make a well-rounded decision. And if they come back and they say, "Hey, I want to work with Berknell Financial Group," number two is gathering all of the information. I think that's when we get into the data, right? I typically tell folks, like, I can't diagnose without first, or prescribe without first diagnosing. So I send them a share file link. They upload all their documents. I give them credentials to our financial planning software, and then we get into the numbers. It is myself, my associate, our accountant, right? And oftentimes our estate planning service that we utilize, that we go in and we talk about what would be the best recommendations. And this is step number 3, evaluating the data. What would be the best recommendations for this family or for this individual? We go through that, make the recommendations, and step 4 is presentation and implementation. So that's when we're talking to the client and say, "Hey, from what you gave us, these are the best 10 to 15 recommendations for us to implement today to get to," going back to step 1, "your idea of wealth." Because you said this is what wealth means to you. And if everything checks out, we begin to implement that. And then we do periodic reviews on at least a quarterly basis, right? So 1 quarter will focus on taxes. The next would be estate planning, investment management, general financial planning. We'll have these conversations to kind of rework the plan and go through it. In the first 90 days, I would say we talk a lot more because there's a lot more setup, right? We're setting up accounts. We're doing all these things, transferring accounts into our firm or into our custody. So that's kind of the initial client journey for a Berknell client.
All right, so I want to get into the tech stack and what they experience and what type of UI you are providing them as clients. Ross Marino is tuning in. He's a former guest on the How I Serve series. He's got a great niche himself, but he really is impressed with the niche that you're working with, as I think most people listening, because Dasarte, most people have a hard time niching down, especially advisors who have any type of season to them. So now that you have focused in on this niche, you have a process for onboarding new clients. What is your tech stack and then the client experience through that tech stack?
Yeah, I would say I have a very lean tech stack. And I just want to say that for advisors that are building or scaling their businesses, we oftentimes psych ourselves out that another piece of technology is going to be the thing that takes you to the next level. That's not it. That's not what's going to be the thing. First and foremost, our website is designed for the professional that works in tech. So we actually recently redid the website, and it's aesthetically pleasing. If you go to berknell.com, you'll be able to see it. The first thing that you see there is expect the windfall. And I say that because when it comes to equity compensation planning, you have to begin to have these conversations before the liquidity event happens, right? Like you have to begin to plan for that first. In terms of tech stack, I use Altruist as a custodian. And with their recent technology, that really cuts out a lot of the costs that I may have to incur due to outside stuff. So when you're talking about fee billing, you're talking about performance reporting, you're talking about client onboarding in an efficient way, paperless, and in 2 to 3 minutes, right? ACatch, all of that stuff I can do through Altruist. Now, my tech stack really is a financial planning software. I use Money Guide Pro for the financial planning software. I use AdvicePay to bill my clients that are not getting like the traditional billing methods, right? They're using subscription to pay us, right? So I use AdvicePay. I have Zoom in this age of the pandemic, right? To host my meetings, to even create content. So I do my podcast on Zoom as well. What else do I use? I use Holistiplan to help with tax projections for some of my clients. I do believe eMoney is trying to create something for tax within that Money Guide Pro investment structure. Wealthbox for client CRM. It's smooth integrations. I have a compliance professional that I utilize as well. But those are like my main kind of things that I use. I use good old Excel for a lot of my investments, right? Yep. But I'm super bare bones. I think that as Berknell kind of broadens and as we scale, right, we're going to go into seeing how we can utilize other technology to bring other advisors on board, perhaps, right? So that's something that I'm going to be exploring in the very near future.
So I like your tech stack. So some familiar names in there with my audience. You know, we're big fans of Wealthbox for the simple fact that the user interface is really, really easy to adopt. If you can't adopt Wealthbox, you're not going to be able to adopt any of the other ones. The integrations are great. Holistiplan is something that showed up on the radar for us when I was at the XYPN conference a couple of years ago, and they demoed it. And I thought, this is a game changer for serious advisors that want to serve their clients beyond asset allocation. I'm curious about your Money Guide Pro decision. I find most advisors, especially ones that are breaking away, they've got a choice between eMoney, Right Capital, and Money Guide Pro. And it usually comes down to a personal preference. What made you pick Money Guide Pro?
Necessity. So I came out in 2015 as a young advisor who was hungry and just trying to make a way. And the story behind the Money Guide Pro decision was that they inked a partnership with my then custodian, and some of my clients are still there, SSG, Shareholder Services Group, saying that you would get a discounted fee to use Money Guide Pro if you are an SSG user. And I'm like, I need this to plan for my clients. I'm going to use that, right? So it really was, for me, it wasn't something that I thought very deeply into. It was a smart partnership. It was cost effective for me at the time, being a young, growing advisor, and that's what I went with. Now, in terms of just the tech stack and what it offers, I think that it has a pretty nice aesthetic as it pertains to, confidence scores is what they call it, and how you communicate that with your clients. It makes it very easy, but the initial decision to make it was just because it was cost effective, right? It was a deal from my custodian, and it kind of worked out really well.
Yeah, I can definitely relate, as a lot of young advisors can relate to that. All right. So I'd like to wrap up with a discussion about Altruist. And so here's my disclaimer. I have a custodial relationship with Altruist. I think they're fantastic. I've got my own accounts over there. I've loved watching what Jason and the team have done to have the platform evolve. You have a role at the firm. I'd like to hear about that, and then why you think Altruist is the right custodian for you and your firm.
Yeah. I am the head of community at Altruist. Altruist has a mission to make financial advisor cheaper and more accessible for everybody. So if you think about the journey that I just outlined in this conversation, I was seeking to solve that same question prior to leaving the bank. Why can't I work with my mom? Why does she have to have $2 million in liquid assets for me to onboard her, right? So when you think about Altruist, we want to make this more accessible. My role is to market to advisors through our podcast, the Human Advisor podcast, through our growth series, and give them all the tools that they need to scale their business effectively, whether or not they're with Altruist, right? I think Jason Wank and team are geniuses. I think Jason has been trying to really improve the financial services space since he got into the business over 20 years ago. And I think Altruist has a fantastic product, a fantastic user experience, but a very, very, very bright future ahead. So I'm super bullish about everything that's going on at the company right now. In terms of it being right for my firm, when you think about that client avatar, as you put it earlier in the show, these people are already technologically savvy. They want less hassle, but they still want an experience that is seamless and something that makes their lives easier. So if that's what our firm is saying that we can do for you, it helps to have a custodian that aligns, right? A tech platform that aligns with that mission. We're going to make it easy. We're going to make it quick. We're going to give you more time in your day because you won't have to spend too much time setting this up. You'll be able to go in and seamlessly look at your account, its performance, right? In terms of bills, you'll see everything, the trade it's just super seamless, flawless. And if you know anything about tech and the most tech forward companies, Tesla and other things, right? They always want to make things look visually appealing as well, right? So it looks good. So again, Altruist, super bright future ahead. I think the company is just getting started with all of the things that they'll do to revolutionize the space. And I'm excited to be a part of it and also excited to watch.
Yeah, I got to tell you, it's been fun to watch, experience a little bit. I work with some breakaway advisors and we do custodian reviews to try to select the right fit. Here's the thing. Altruist isn't just for the startup advisor. Altruist is for somebody that understands the industry is changing quickly. Some of the legacy technology, it's too clunky to really deliver a user experience like people are going to want in the future. And I see Altruist in a lot of tech stacks at some pretty high-end firms in the near future. In addition, I love the trading functionality there. And then the cheapo in me cannot believe the cost structure at Altruist. You're trading commission free. You eliminate the need for some of the clunkier technology out there that charges you, $35 to $60 per account to get portfolio accounting, performance reporting, and billing. So if you're looking for a custodial partner that's very tech forward, I encourage you to check out altruist.com. Dasarte, I really appreciate you coming on the How I Serve show. You've been on a great journey so far. You're a young man. We're going to be able to have another one of these episodes with you here in 5 to 10 years, and it'll be really good to watch how you evolve. Thanks so much for coming on.
Thank you. I appreciate it.